happened to me. The highest number of falls worldwide is a fall on the stairs. But it was surprised that even the other president of the U.S., Obama, if Obama is coming down the plane, do you notice that he doesn't hold any of the rails? He just goes. So that they will say he's an active man. But people have died going down that thing. That's why rails were provided. We don't use them. Where am I going to tonight? It will never happen to me. I don't really think it's going to happen. Whenever we call for such things, seminar like this, and you ask yourself, why don't we have the place full? That's the same reason. I really don't think, I'm not going to, I know it. I know it. I've been trying to get mortgage for this church for the past 3 weeks. In fact, I'm almost frustrated now. Every bank I go to, it's like they hate. They first of all don't really like commercial mortgage if you are not a very big company, number one. Number two, they don't like churches. In fact, one of them told me clearly, I will say it clearly, I'm not hiding it, it's TD. TD said we don't give mortgage to churches. Clearly, the man told me, we don't give mortgage to churches. But he forgot that the very first day I called him, he was the same person who asked me, are you a doctor? That was the first question I asked him when we were discussing more. He said, are you a doctor? You see how selective it can be. If you are a doctor and you're asking for a mortgage on behalf of, I can give you because you are a doctor. But when I said I'm not a doctor, the next time I went there, he told me, we don't give mortgage to churches. I've gone to Scotia, I've gone to CIBC, I've gone to, which other bank? I've gone to BMO. BMO has not even called me back. That's what it is. That's what getting finance in this system is. But the people that know what to do, what does the Bible tell us? They will be strong and they will do exploits. There are people that know how to navigate all these things that I'm struggling with here. They just know what to do. They know who to call. They know where to go to. Where I work now, I used to crack a joke. I said, for everything, there is an app or something for it. For everything, in fact, right now on my computer, if you see the number of, what do you call those things? Something like that, when you, favorites, favorite spots. Because if I don't have them, I'm going to have to search for the next 5 minutes to look for them. So I have about 30 different ones I use. But what am I trying to say again tonight? I feel bad when I see people come, leave their houses, want to come and teach us things, and you don't see anybody. Someone came to my office. Why are you telling all these stories? He has been here. This person has been in this country. I came from Nigeria, and I started working there. And he was asking me about RRSP. And I looked at the person and said, you have been working, you've been in this country, you have no clue. I only knew about RRSP through this kind of program. We invited this guy who was my colleague, and he came and was talking of investment, and one of the things he mentioned was RRSP. So when I went back to work, and I started asking him, and he was telling me, you can take some of your money, you can put it there. My company wasn't investing for anybody. They don't care. Some of these private companies, they'll give you a salary, you can go. That's how I started my first RRSP. Today, I know how much is there. Even when I lose my job, I don't still touch it. It's still there. It's still there till now. If one thing I've noticed with money is this. If you have a friend, two of you have the same job, you earn the same amount, you are having the same challenges, same children. If you are sick, same kind of sickness, all this, everything. But you will discover one thing. One will be doing better than the other one. And you begin to wonder why. I found out one thing. Money is like spirit. So long as you have it, you see it to spend it. But if it disappears, like every month they pay you salary, you tell the bank, every month my money comes in there, remove 500. You know what will happen? You will balance your brain to spend the balance. If you are making 2,000 and you tell the bank, remove 500, all your brain will be thinking of at the end of the month is that I have 1,500 to spend. But if you don't say that, your brain will be saying, I have 2,000 to spend. What will happen is that in 10 years' time, the guy who was keeping the 500, you will see what he has done with his 500. How did you do it? But two of you are working in the same place. You are all doing the same thing. Ignorance is the problem. And so I'm saying this because I feel sad when I see you coming. And you say, these chairs, where are the people? Because you can talk, you can advertise, you don't see them. But when they now have this thing, they will go to their pastor. Can you help me? I am not a finance expert. That's when I now start looking for people. Oh, please, there's this guy, there's this my friend who works in the bank. Oh, there's this friend of mine who has this mortgage. But if you had come to these things, you will learn things. So tonight, I don't want you to be upset, even if it's two people. I might be the one that will profit. As you sit down here, see it as if you're talking to a huge crowd. Because I am the pastor, everybody will come and ask me down the road, and we have many people here, or some people here that they will ask. But I will definitely learn tonight. And so I want to welcome everyone who is here. I don't know. Okay. Oh, interesting. Andre is a mortgage specialist. I don't know if you are commercial, because I'm not very happy with, you see, I'm not very happy with commercial people. Every place I've been to, they're always quick to show me the normal mortgage. But once you say commercial, everyone, I really don't know why. In fact, I've been very upset with two banks. One was Scotia. Scotia gave me an appointment and said, please come on a Saturday. And I drove all the way from my house to the bank, and the lady was waiting for me. She saw me, oh, so welcome. I came right on time. Let's go to my office. We sat down, and when I started speaking, she said, oh, that's commercial. You may need to come. And I said, do you know where I'm coming from? You know how much gas I spent to this place? They did the same thing to me at BMO. BMO gave me an appointment. You remember the whole story? Last week, I got there, and as soon as I started talking, the guy said, oh, this is commercial. Do you mind giving me your number? The guy will call you. He has not called me. So seeing a mortgage specialist, I said, okay, if this is commercial, she's in trouble. And again, she says, no, I'm not commercial. But if you know the number of people here who will be looking for mortgage, but they are not sitting here tonight. And here you are coming to tell us about mortgage. So tonight, having apologized to Andrea and, Femi. To Andrea and Femi, that's my apology. Please take it like you're talking to a big crowd. First, because the pastor is here, who people will run to if they need the help. And then give us all the things that you have. Don't say, because they're not men, I just give them a little bit. Give us everything you have. I don't know if you have slides with you. Okay, you don't have slides, okay. If you had slides, we would have just used a computer, but since you don't have slides, that's still fine. So I'm welcoming everyone for this meeting. These ones are, my brethren are used to me. It's just two of you that will say I'm welcoming. So thank you for coming, and it's very challenging. Nobody likes to talk to one person. We love crowd. That's a secret in anything. But unfortunately, tonight we're not getting them. Not because we underrated you or we didn't advertise enough. We surely did. I think you even saw what I wrote 2 days ago. Was it 2 days ago? We surely did, but this is Canada. In Canada, freedom is what reigns. In the West, everybody's free. So please accept my apology. We're just going to pray, and after that, I'm going to invite Andre to kickstart. She's going to be telling us, Andre is a mortgage specialist with CIBC. I was very upset with CIBC, but because Brother Samson is there, I didn't want to shout. Because I went to CIBC. I'm telling you, I went to CIBC, and the lady said to me, she talked to me and gave me a set of cards, about 15 or 10 or whatever of them, and said I should be calling them, one after the other. So I did. I called, many didn't answer. The first one who answered me, and then the next thing she said to me was, no, it was a he. He said, rudely said to me, that's commercial. And I said, I didn't know it was, they gave me the cards and said, call these people, so I had to go back to the lady. And then the lady says to me, but he didn't tell me it was commercial. And I said, but when I said to you, I said I need a mortgage, I'm a pastor of a church, I need mortgage for a church. What does that translate to you? Anyhow, so CIBC, I'm very angry with you, so make sure you give me a mortgage. The only good thing with CIBC was that they were the first that gave us mortgage when we came to this country. They did give us a mortgage, but BMO is very, very, what do I use? They're very aggressive right now on us. So the other ones, BMO has just been on our neck. So we have been giving it to BMO. CIBC has been very slow. So we're just going to pray, and we're going to start very quickly. Father, we want to thank you for tonight. Thank you, Lord, for this beautiful evening. Thank you, Lord, for your children that you are using, Lord, to bless us tonight. Father, we want to ask you, oh God, that what we will learn tonight, oh God, will actually endear us to higher levels, even financially, as we listen. We ask for understanding. We ask, oh God, that if there's anything blocking understanding tonight, you will remove it. The Father, Lord, at the end of this meeting tonight, we will be on a better pedestal in terms of our finances, in terms of everything that has to do with mortgages and such like. And the Father will be able to use the resources of this evening to not only advance your kingdom, but to also enhance our lives. Father, we know that beyond that which we are asking you tonight, you will do for us. Thank you for hearing us, O God. In Jesus' name we have prayed. All right, very quickly, let's put our hands together as we welcome to the podium. Andrea is coming to talk about mortgage, I believe. And so please, let's be open. Let's listen to her. If you are looking for a mortgage, please come to me first, and then I will give you some bribe, or give me some bribe. Then we can now reach her. Oh, no, that's not true. So, all right. So tonight, please, let's put our hands together as we welcome Andre Nolasco. Okay, I got it. You're very welcome. Thank you for coming. You have your mic there.
Thank you. Oh, there's another one. Okay. Okay. Yep. There we go. So, thank you for coming out tonight. And as the pastor said, a lot of times whenever we've done these seminars, it is often common to see that not a lot of people show up, but there's always blessing in the ones that do. So I'm not discouraged by that. I've been with CIBC for 14, almost 15 years, and I've done several different roles, and I work closely with Samson's branch. And over the last almost 9 years now, I've been doing just mortgages. So basically, the topic of tonight is about the uncertainty in the market and everything else that we've been seeing and how that affects everything that you decide to do about a mortgage. So I just brought a few key facts about something that my realtor sends me every month in relation to where the housing market is doing in Calgary. Because it's very different from when you hear in the news in terms of you hear a lot of general statistics, and they're often about all of Canada, all of North America perhaps. And Calgary is kind of a very different market in that way. We're very stable. Generally speaking, we're very stable. You will see some up and down swings. A couple of years ago, and even last year, at the beginning of the year, we saw houses just go crazy high. That was unusual, but our market is usually kind of like this, and it'll spike, and then it'll go a little bit slow, and it might dip again, but it's never like Toronto or Vancouver that go in crazy spikes of like 100, 200,000 up and downs, that can feel pretty scary, and still people there don't stop shopping because of that, right? So about one of the main things that's driving the uncertainty right now is the tariffs. So Trump came with a very strong mandate, I guess, trying to scare a lot of people into, oh, we're going to put tariffs on everything. It doesn't make sense to do it for Canada. And at least personally speaking, I think a lot of it is just a political move that he will likely back away, if not fully, to a much lower level. just because we've been partners for a long time. So the US and Canada don't have any business fighting each other. And so I personally think, and even I was just at a conference with our CIBC head economist, and he's usually pretty on point. I've heard him over the last few years. His name is Benjamin Tal, and he's usually very accurate with his predictions, and he thinks this will blow over, and as most people do. And even if we do see an impact, we will. If he does impose, even if it's only 10% tariffs, we'll feel it. But a lot of it is just actually fear-based. Most of it is fear-based, especially with houses. Everybody needs one. It's not like a commodity. It's something you need to have. It's something that it's not just for comfort or because you want to have it. It's either you're going to rent your whole life and pay someone else their mortgage, or you're going to get it for yourself and you're going to pay it down slowly. A house should not be anything that you're thinking of selling within 5 years. You should plan to have it 10 years or more. And if you do, you'll see the market do that, up and down, and it will recover. So over the period of time that you plan to live in a house, you will likely see it go down, but you'll also have a chance to see it go back up. So the benchmark price in Calgary right now is actually $583,000, and it's actually a 2.8 increase in comparison to January of 2024. So even though things sound bleak, the prices have actually still gone up. Homes sold has gone down in terms of comparison. We do all of these comparisons to last year, so 12% actually down in comparison to last year, but there were still 1,451 sales in Calgary last year. And there's 2,800 new listings this year. So a lot of people are listing, and part of it is also fear. Part of it is also some of the people that might be maybe feeling more of the pressure from the whatever company they work for, feeling that fear with the tariffs. A lot of them are saying, oh, maybe it's the right time to get out of this, or if they have investment properties, they may be wanting to let it go because the rental market has also slowed down. Our inventory is up. So last year and the year before, 2023, the issue in Calgary was we didn't have enough houses to sell. People didn't have choice. And so it was a seller's market because the few people that were selling could make people bid, which is what happens a lot in Toronto, Vancouver, and that isn't common in Calgary. So I actually like that it's kind of gone back to normal, because in Calgary, usually the price you see, you can offer a little bit more, a little bit less, but it's usually 10, 20 grand at the most. It's not 100,000. And last year we were seeing people bidding 50,000 without conditions and all these crazy things, and we're not seeing that now. The months of supply, that just means like how much inventory can last on the market. And the days on the market is 41 days on average. That's really long. When it's a market where it's good to sell is when there's like houses flying off in 5 days, 7 days off the market. That's a good scenario for people that are selling. But for people that are buying, this is good. For people that are buying, and it means you have more choice of where you're going to buy and what you're going to offer and what conditions you want to buy under. So in terms of buyers, I would say right now is more of a buyer's market. And there is some hesitation that we don't know how the politics will actually turn out. And if it goes the other way, there is a potential that the prices will drop even a little bit more this year. But at the end of the day, they'll come back up. And so at the end of the day, what I always like to look at is the house will recover its price, and you're still paying rent wherever you are. So whether a lot of that money was going to interest or principal is regardless, really, because at least it's your house. You're not wondering if they're going to ask you to move out because the person that owns the house decided to sell or anything like that. It's your house. You do as you wish with it. And so a lot of that is kind of what I wanted to bring up today. And then there's a lot we can talk about in mortgages. So I told Samson that I would rather leave it up to questions about what is it specifically that some people are wondering about. So I can go really deep, but mortgages is super wide. So it depends on what area of mortgages you're wanting to know more about. I can answer questions specific. I can talk about first-time home buyers if that's more of what we have questions on, or RSP contributions for the down payment. CIBC also has cashback, which is different from the other banks. All banks have a cashback feature, usually to bring mortgages from another bank to us. But there's also another product the CIBC has that is very unique. And when I used to do these seminars a lot before, and when I did, people really liked that one. So if you don't have the full down payment, we are able to do an RSP loan. Let's say you don't have the full amount, you have a part of it, but not all of it. We can let you borrow money to invest in an RSP. You have to hold it there for 90 days because as per government regulations, you cannot take it out before 90 days. But then after it's been 90 days, that's as good as your money. As long as you don't have a ton of other debt, we can give you that kind of loan, and you can then go ahead and purchase the actual property. And then on the mortgage itself, you can actually get up to 5% cash back. So if you do the math, if you're missing part of the down payment and you want to do it, but you don't want to have another minimum payment per month because of the loan for the down payment, you can take the mortgage with cash back and then pay off that loan right after you take possession. It does increase the rate of the mortgage, and so it doesn't always make sense. Right now that the rates have come down, it's starting to make sense again. Last year, it didn't make sense. Last year, the rates were way too high, and increasing that rate anymore was not okay. But this year that the rates have started coming down, it is becoming something that is okay to look at again. We have a lot of strategies that we use that for. I've had a client that he had really good income, but he also had a ton of debt. And so he could qualify for that house if he didn't have so much debt. So he had a family member that helped him pay like 20, 25 grand of debt, but then he took cash back on the mortgage and he was able to give that money back to his family member. And then he was able to qualify. So there's a lot of things like that that we can do, and a lot of uncertainty also people have about people that are self-employed. So those two topics are probably the ones I talk about the most: first-time home buyers and people that are self-employed. We can go into a whole bunch of different scenarios, but does anyone have any specific questions to any area of mortgages?
If I'm looking to get a mortgage for a house?
Like the first time?
Yeah.
Yeah, okay. So the first thing you should
Sorry,
do... Yeah,
you
go
can
ahead.
do the first time and do the second time for me.
Okay, okay. Okay. So when you're looking to buy your first house, the first thing you should do is talk to the bank. And don't go talking to a realtor. Don't start going online and looking at properties. Talk to us first. The most important thing is, what can you buy? Because if we tell you you can do 300,000 and you've been looking online at houses that are 400, you're gonna be disappointed when you talk to me. So the first thing you should do is actually talk to one of us. And there's a lot of techniques. So if, for example, someone is an employee, we can use direct deposits on a bank account instead of having to use pay stubs. And sometimes that works out better. And that's actually something that is specific to CIBC. Every bank will have slightly different rules. But I will say that when you're looking for a property, one of the first things we ask is, how much down payment are you giving? If you're giving less than 20% down payment, the answers are going to be very similar at every bank you go to, because we all have to go through the insurance company. That's what we call them. So there's a company called CMHC, who is a Crown Corporation, so it's governed by the government of Canada, and they are one of 3 companies that can approve a loan. So a mortgage loan is first approved by the bank. The bank has to look at all of your things, all your credit, everything. And we say, you know what, that makes sense. We're good to approve this client. As long as we are good, we will then send the file to the insurance company. They have to approve whenever a person has less than 20% down. So if we are okay with it, but the insurance company is not, the file gets declined. Because whenever you have less than 20% down, it has to have that insurance. It's mandatory, and it doesn't matter what bank you go to. We all use the same insurance companies, and they charge the exact same. They just each have different programs. So sometimes they'll have a program that is best for newcomers. The other ones will have a program that's good for self-employed people. And so we just choose whoever is willing to approve the file. The bank doesn't actually care who chooses it. As long as they approve, we're happy, we're good to go. So first thing you do when you want to do that is you look for somebody like me. You can find us through the branch or online. You can go on cbc.com and find a mortgage advisor anywhere in the city. Or you can go to a branch, and the branch would give you the phone number of somebody they trust. Once you talk to me, and every one of us will have slightly different processes. We all do the same job, but we all carry it out sometimes in a different way. So I like to first get all your income documents before we have a full-on meeting. So I usually ask, on my first call to you is, what do you do for work? And how long have you been there? So that's my first question. How long have you been there? And then you'll tell me a year and a half. And I say, okay, great. If I look at that, depending if they're full-time, a T4 and a pay stub might be enough. But if they've just recently got an increase, then that's not going to work. I might need a job letter. So I will ask for those things, those very basic questions first. And then I will ask if there's anybody else, obviously, on the application, if they have any kids, because we can also use child tax. So what people get for child tax is usable. So I'll ask those questions, and then I'll say, okay, I'm going to send you an email. Please send me XYZ. Once you send me those documents, then we'll set up a meeting. Some clients find that a little bit annoying. I know. I know, because I get that told to me a couple times, but it's in the best interest of you and me. As soon as you send me those documents, when we meet, I'm going to have answers. When we meet, I'm going to say, this is what we can do. But if we talk and you have no documents for me to review, I'm not sure what your income is going to be on that application. So I can tell you kind of what I'm telling you today, but it's not going to answer your specific scenario. So I usually ask for those documents, then we meet either in person or on the phone. The bank doesn't mind whether we do it in person or not. And then I don't like to pull credit right away unless you're ready to like move forward in the next couple months. Because every time we look at your credit, we take points away. So we take 5 to 7 points. Go ahead. Yes.
If you have one of those apps where you can actually pull the credit, is it possible to show you that?
So I'm okay with that. Not every person is. Not every person in my role. Some of them are like, no, that's not accurate. It is actually pretty accurate. It's pretty close. So I will do that on an initial meeting. If you're not sure exactly when you want to proceed, I will do that. But at the point in time where you tell me you want to go with a realtor to look, I'm saying you're not going, I'm not giving you no pre-approval, no email until I have looked at that credit. Because sometimes what happens is on the bureau, it'll tell you a good, very close amount to what your credit score is. When I pull it, it can be a little different because it may have refreshed from the previous month, etc. And we don't only look at the score, we look at payment history. So on that front, sometimes in those apps, at least when you bank with CIBC, you can actually see your entire report, not just your score. And so you can actually pull your entire report. If you can pull your entire report for me, I'll look at that. And we can look at that and say, okay, if your payment status and everything's on time, if you're not too close to your credit card limits, then your credit score is going to be good, even if I look at it on my computer. So credit scores, one of the biggest things is do not be close to the limits. People underestimate how important that is. You might pay on time as much as you want. If your credit card is a limit of 1,000 and you're owing 700, it's already too much. If you owe anything above 70% of its limit, your credit score decreases in it fast. So that's one of the main takeaways about credit that we're talking about here. But so those would be the first steps. And then once I determine that part, then we talk about the down payment and say, okay, what do we have for down payment? And we go into looking at whether they're first-time home buyers or not. And if it's under 20, go ahead.
Sorry, you just spoke about credit scores.
Yes.
Credit card limit and all that. What if you have 2, 3 credit cards? One of them, for me, I have a credit card I use online, and it's deliberate, so I make it very low. So even if you steal it, you can't take much.
Yeah.
It's $1,000.
Yes.
So I can run it to about 700, but I have another one that is in big thousands, double digits. And that one is usually small. That's what I use for major things. But online, I'll go to the 1,000 one.
Yep.
So which one are you going to look at?
We look at all of them.
So which one will you use to judge then?
So all of them. Because the credit score, the system where you pull your credit score is an algorithm. So Equifax and TransUnion are the 2 agencies that will give you a score. They look at all of it. They look at how long you've had each one, how much of a limit it is, what's your balance, any late payments, all of it. And they will take, so one other thing about that is if you have those 3 credit cards, for example, and the $1,000 one has been open for a year, and then your other ones have been open for 3 or 4 years, they will go and say, okay, 3 credit cards, number of years divided by 3, because that's how many you have. So the tenure of the credit cards as an average also determines your credit score. So when clients pay off debts, they always want to close it. And I'm like, don't close it. Don't close it. If you close it, now your score's going to go down. You have less debt, but now you have less history too. Because as soon as you close it, the algorithm that that system uses decreases your score. So all of them matter, to answer your question. All of them.
So are you saying that you don't close your credit cards when you stop using them? Is that what you're saying?
Ideally, no, I have one from RBC that I had when I was 18. When I turned 18, it's sitting at home. I never use it, but it's there. If I
Yeah.
closed it now, it wouldn't matter probably because I have many years more credit cards with CIBC in the time I've been here. But for anyone who only has 2 or 3 products, no, don't close it.
Okay.
Yeah. Does that answer your question?
Yes.
Yeah. So credit cards, yeah, it doesn't matter if it's only one of them. That one credit card can drive your score down. So we'll look at all of that. We'll look at the down payment. In December, last year there was a couple changes. There's been a gazillion amount of changes in our role for the last couple of years. So every bank goes through audits every couple of years. And CIBC went through one a few years ago, and they tightened up a lot on things that are minuscule, like dumb little paper check things that don't affect you as a client much or even us as a bank, but we're saying we're not following our own rules that you're supposed to have this document for the file. And so as soon as that happened, the bank started cracking down a lot on things. So I do ask you to also have some grace for the people you deal with. The amount of changes we have seen in the last couple of years is sometimes hard to manage and remember all the changes. So if I'm not sure of something, I'll tell a client, that rule kind of changed. Let me get back to you on that. And it's not because I don't know, it's just because I don't want to give you the wrong answer. But some of my colleagues might. So if you feel like something isn't sounding quite right, just check with someone else. Check with another person. And then, where was I with that? So we'll go check at that, and then the changes, one of the main ones that happened was we weren't able to do 30-year mortgages unless you had 20% down. Now we can. So as of last year, sometime mid-year, they introduced it where we could do it only for new builds. So if you were buying anything from a new build construction, we were able to give 30 years amortization as of November, I think it was. And then in December, they changed it where if you are a first-time home buyer, you can also do 30 years on existing houses, old houses. That was a change that happened. Before it was like everybody can get it if it's a new build, but not if it's an old house. And then in December, they introduced a change where if it's the first house you're buying, then you can also buy an older home and put it on 30-year amortization, which helps you qualify for a little bit more. Okay? So that's kind of the basic on that. The other question Buki asked was about second homes. Second homes is something that people often think that is like nearly impossible. It's not. You can still do it with 5% down. And a lot of people think they have to do 10 or 20% down payment because it's not their first house. That's not the case. You can still do it with 5% down as long as you're going to move into that house. So the key in mortgages and the key that the bank cares about is, and the insurance company, is are you going to live at that property? They don't want it to be an investment property. And the reasoning behind that is if you're going to be investing, it would be ideal for you to have the 20%. You're putting yourself at risk by not having more. Yes.
So just to kind of add on that, so does it make sense to you to have a corporation or to have some kind of corporation set up for investment so you can actually buy properties? Because based upon the new CRA rule with the capital gains tax, does that make more sense for you to do it in that capacity than as an individual?
Yes, but you cannot do that easily. You have to have 20%. So what he's talking about is when you get into owning more than one property, the house where you live is not the one that's hit heavily with the capital gain tax. It's any other properties you own and rent. And so also key to that is too that if you're renting your house to a family member, there is exemptions to that as well. But yes, for tax purposes, there is exceptions where, like when I see a tax return, sometimes the client tells me I'm renting it, but I don't see it on the tax return. I'm like, are you not telling the government? And they're like, oh, it's to a family member. So if it's to a family member, it's not declared as income. It's a little bit different. on a tax return. But you can't do that with multiple houses because then the government's going to wonder how many family members you really have. But yeah, but one is 6 years old. So yeah, so with that, you can do what you're talking about is a holding corp. So you can open a holding corporation for holding the asset, which is the house, but that is only possible if you're doing 20% down or more. You cannot do it with any property that is insured. It has to be more than 20%. You can have CIBC. How that looks on paper is we qualified you as the client being able to pay that property, but you asked us to register it under company name for tax purposes and liability. When I say liability, I'm talking about if your renter sues you, they're not suing you, they're suing your company, so that it doesn't affect you for bankruptcies or anything like that. But you're still 100% responsible for it on the personal side. It will still show up in your credit bureau because the corporation doesn't have a credit bureau. They're like whatever you do for work is what's going to pay that mortgage.
But that was not, there was a time, I believe, about 20 years ago or so,
Mm-hmm.
where a corporation had its own sort of credit.
Yeah.
And then that got taken away under the Bankruptcy and Insolvency Act.
So with the corporations, nowadays, it's not that they have a credit score, but the bank does have kind of like what the pastor's been looking for, which is commercial mortgages. And you can get them through the corporation name and they won't show up on your personal credit bureau, etc. But it's a lot harder to do that because you have to prove that the corporation has been stable enough and has enough of a reserve fund and is operating quite well in order for the bank to lend on that. And up to the first 500,000 or so, it's not as complicated, but after that, it gets a little more complex. Commercial mortgages sometimes have setup fees just to start them, and it is a different department of every bank, which is why you've had a lot of that. So you do have to be very specific if you're looking for one of those to say the whole commercial thing right at the beginning. So that was that. We talked about the 30 years amortization. What else did I say? Any other questions anyone can think of? Did that answer your question fully, Bucky? Yeah.
I do have a question, though. Okay, I have this question written, and I was going to ask you this question. So when you think about interest, you think about inflation, you think about unexpected expense. These are things that could shake up even those that have, like, you have solid plans and all that stuff. So at what point should the homeowner start worrying about their mortgage? And what are the early warning signs of financial trouble?
So you're talking about when somebody already has a house?
Correct.
Okay. So if you're already struggling to pay your credit cards, come talk to us before it gets worse. Don't wait until you keep thinking it's going to be okay. It's not going to be okay if you don't do anything about it. And as Christians, we often love to play the God card, but God gave you tools. God gave you people to talk to about these things. So one of the things I say about that is just come talk to the bank. If people come to us early enough, there's a lot we can do. We can put a debt consolidation loan together. For most people, depending on when they bought, there's equity in that house. We'll take it out and pay that debt, and you'll sleep better at night. You don't want to do that all the time. So I do advise against refinancing often. That should only happen if you're going to renovate your house and add value to it, or if you're really, really struggling. But don't wait until you lose a job or something. That's too late. The bank will still do things. We have a department that's called financial hardship. Like, there's a phone line for them, and they will help. But don't get to that point because the rates of the loans that they can give you at that point aren't as good as if you came a little bit earlier. Does that answer your question, Samson? Yeah. And then about the market and things, so with one of the things that people are wondering a lot about right now is whether to take a variable or a fixed rate mortgage. If you're renewing and you're not very comfortable with your budget, if it's not that flexible, variable may not be the best if you don't want to take the risk that it will go up. Right now, most people that I'm doing mortgages for are taking variable because in terms of financial advice, it is the way to go. We do expect there will be another rate decrease this year. Some people are saying 2. I think there will be 1 more at least. But the fixed rates don't follow what the government does. So the fixed rates are based on the bonds and how the yields do in the market, which our friend over here will talk about later. But with them, those bonds and yields, because they're dependent on the stock market, and everything that's going on in the States is very unsettling, the stock market isn't doing great. So right now, the fixed rates aren't moving and going down as fast as we wanted them to after those things politically started changing. So variables are still going down because Canada's still looking good. The government still wants us to spend, so they'll continue decreasing those rates on the variable side, but not on the fixed side. On the fixed side, it's not really in their control. The banks are decreasing them, but just not as quickly or as heavily as we expected. And that also means that some people are afraid to buy because they keep waiting for these rates to drop. You can't keep waiting forever. Timing the market is possible, but it's not easy. And you're never gonna know for sure if it's the right time. So the best thing to look at is, right now it is a buyer's market in my opinion, like I said earlier. So it is, the house prices are low and rates are now below 4.5. So it's a good time. I think it's a decent time. If they do go down a little bit more, okay, now you've lived in the house a few months while you were paying your own equity down instead of paying somebody else's. So at the end of the day, you might lose a little bit because the rate might be a little lower 6 months, 8 months from now, but you've been paying that mortgage, and some of that is going to capital or principal for you, not for whoever your landlord was, right? So one other thing that happens a lot in Calgary right now is people are buying homes with suites, legal suites. The government is looking at approving a program. They've announced it, but they haven't put in place the measures that it would take for the bank to be able to do this. But they've announced that they're gonna give really low rates on loans for doing legal suites. And it sounds great, but they haven't told us how they're gonna carry it out. Because the banks aren't gonna give that kind of interest rate. It has to come from the government some way, somehow. So the government hasn't stipulated how that's all gonna come trickling down. So it is there, we just don't know when it's gonna happen. But if you buy a house and perhaps I say that you're only qualified for this amount, and that means that it cannot have a suite through the builder, because the builders will charge $100,000 or so for the suite. If it means that you can't buy it with a suite, but it has a side entrance or a walkout, great, do it. And then hopefully next year that loan will come to be. And if it doesn't, even if it's not right away, maybe a year or two, that house will continue going up and you continue paying it down. And later on you can borrow against it to be able to do the suite. Okay? Yes?
All right, thank you. I just wanted to ask a question regarding the types of mortgage interest rates. I read already about the fixed rate and the variable rate. I just wanted you to shed more light on it, and also probably tell us which one is better. Which one would you advise first-time home buyer to go for? Is it the fixed rate or is it a variable rate?
So usually most people would tell you that a first-time home buyer would be more likely to go with a fixed, but that's not necessarily, it's a case by case. If a client is coming to me and they're very conservative and they don't want to go to the top of their budget, let's say they're not looking for the house of their dreams to be the first house, they just want to get started, and they're not maxing out their budget, I think they're okay with a variable. So it just depends on every situation, but I usually gauge if a client's not gonna sleep at night if the rate goes up. So if you're looking at investments and you're looking at your investments every day to see if it went down, you're not the person for variable. You are not the person to take a variable rate mortgage. It will drive you nuts. So I would ask those type of questions to a client to determine whether they're suited for a variable or not. Another thing is that every bank treats mortgage in, like, we call them products. So every year is a product, 1 year product, 2 year product, however many years you want. So a lot of people choose the fixed, because they're afraid that if they take a variable and it goes up instead of down, which is the expectation, now their payment is gonna skyrocket. That's not how it works, at least not at CIBC. With us, if the minimum payment is, let's say, $2,000, and you started at a rate of 4.6%, and suddenly, instead of the rates going down this year, they go up 0.25%, the bank actually leaves your payment exactly as it is. What happens is that more of your payment is now gonna go to interest as compared to when you started that mortgage. Let's say out of the $2,000, $1,500 was going to interest and $500 to principal or something like that. If the rate goes up, it might be $1,550 or $1,600 to interest and less, but the proportions will change, but not your payment. It has to be really drastic, as it was a couple years ago, when people took variable because it was 2%, and they're like, yay, and it's like, yeah, now it's 6. And people didn't pay attention to it. So that's another one. When I talk to a client, I also try to gauge if they're the type of person that's gonna pay attention to it. Because there's the people that don't sleep at night, and there's the ones that don't pay attention. So if you don't pay attention, it's also bad. Because if you weren't paying attention and it kept going up and up and up and up, and you did nothing about it, if you didn't try to mitigate some of that increase by you voluntarily asking the bank to increase it, when it hits a certain threshold, if it hits more than 50 years amortization, we will ask you to increase that payment mandatorily. We will say, okay, you cannot take this long. And then you have to increase it by whatever we say. But if you come to us with time, you say increase it by $100. That delays that process and hopefully gives time for the rate to come back down on its own. Yes. Okay.
I have gone both ways.
Yes.
Yeah,
That's often the case.
She sleeps because I'm awake.
Yes, okay.
No, yeah, she's sleeping because I'm awake. If two of us should sleep,
Yes,
the banks are coming.
yes,
So I've gone both ways, and I found out that, you see, this variable, I was monitoring it, I was following it. I had to call the bank at a point and say, hey, and then they said exactly what you said. Oh, yeah, well, if you want blah, 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 you can add some money to it, and I did the first time. The rate didn't go down. For whatever reason, Canada kept pushing it up, and then I went again, and I said, you know, why am I losing all this sleep? As soon as that mortgage ended, the next one, I went on fixed.
okay.
And I said, at least I can sleep. My wife will sleep because she's not looking at all those figures, but I'm not sleeping.
Yeah,
So it depends on, just like you said, it depends on the kind of person you are.
yes,
If you are like my wife, good. Can take the variable and still sleep.
yes,
But at the end of the day, you realize that I've really not been paying so much money. The interest has been taking it off. And you still sleep all the same.
yes,
So that's what I will say. Everybody would have gone both ways,
yes.
and I decided to stay fixed,
Okay.
at least for now. And since I've been sleeping well.
So with the fix, the thing with that is that if you happen to, when the prime starts going up, after the second time or so, the fix will go up with it. And so when you try to lock in, it's also important to see the timing of that.
So are you saying the fix is not really fixed?
Well, the fix is fixed when you sign that contract. But it will change depending when you come to me, right? Because the rates continue to go down. So let's say, for example, that today our special offer on a 3-year fixed is 4.39, okay? Tomorrow it could be 4.29. And so it depends on when you talk to me and when that mortgage funded, what was it? But once you've signed, that's it. It's not changing. Yes. And if you happen to have locked in when it was a bad time to lock in, when it was in the 5, 6, you can also break it, pay as a penalty, and we'll give you the current rate. You don't have to qualify again. You just have to sign. Pay the penalty and sign. If you, let's say at that time, your credit, your income, something isn't right, and you don't want the bank to go through the whole process. If you have the money to pay the penalty, just pay the penalty and the bank will give you a new rate. And like right now, it's starting to make sense. I've seen a lot of cases where it's started to make sense. It doesn't always, depending how high the penalty is, but right now it's starting to make sense again since the rates have come down, for some people, 1.5% in comparison to their 6% rate. Yeah. Go ahead.
Yeah, what part of the population, what demographic in the population is better suited for a variable rate mortgage? Because I tend to notice that if your income is fixed or your salary is fixed within certain measures, it seems a fixed mortgage makes more sense. Fixed rate makes more sense. But what the other part, I mean, what I'm trying to figure out is what demographic does that apply to most often?
And I don't think it's a demographic. I think it's dependent on how comfortable your own budget is. So, because actually, if you have a fixed amount of salary, then you know exactly how much you're getting every month, and you might be okay to take a bit of risk because you're okay if the payment goes up $100 or $200. So actually, I would actually go opposite to what you said. where I actually think that the fixed income person has a more, a higher tolerance for risk in terms of the minimum payment going up or down. Whereas if you're self-employed, or if you're working 2 jobs and they're both part-time, and like they're not certain hours, you might not be the best for a variable because you do have risk. And if that mortgage payment goes up a couple $100, you're gonna feel it. So I actually think, and then also it depends on your life stage. So having kids is a big one, right? If you have kids, that throws another complication into the equation, and if they need things for school, if they, anything they need, you suddenly need more cash flow. So I would just say to try to always not go all the way to the max. But as I said to the other question, your mortgage payment isn't gonna go up right away anyway. So as long as you're okay to kind of look at it and see what you're gonna do about it, either way is fine. It's just, you probably find that a lot of the demographic that is taking that is the first-time home buyers, but it's not necessarily because they can't take the risk, it's because people don't take the time to explain it to them. So then they just say, yeah, just go with fixed because it's safer. And then the person that's doing my job isn't worried about you coming back and complaining to us. But if I did my job right and I explained everything up front, you did an educated decision. And you made your decision with that. Go ahead.
Sorry, I think mine is not a question. There were people who came in here while you were on, in case they have questions, that because they're not sure what you started with.
Right.
Do we have anyone who has a question that wants to ask?
Yes.
Especially, I know 2 of you came in while she was on. Any question? Yes, I knew.
So I'm not going
Well,
through
she's
the
going to be
slides.
here anyway.
I'm not going through the slides, by the way. We're just going through, like, I talked about how the housing market is doing, kind of gave you some statistics from a paper I have here. And that one I just kind of gave it to you to take as general information to read at home. But I'm just going over, you need this for income. You would first come to me to start a discussion before you talk to a realtor. You first come to somebody like me to talk about that. We look at your credit and we look at your income. Those 2 things are the first key. Down payment we can fix in a roundabout way. There's different things we can do about it, but the income and the credit are what they are. So that part is gonna be there. I have had a lot of clients. When I started, I was saying I've been in this role, May will be 9 years, but I've been with the bank almost 15. And when I started in this role, I used to do these seminars a lot, and people were very afraid of taking that first step because, I had late payments. And a lot of times when they came to me and we actually looked through things, it wasn't that bad. Or if it was bad, you're the client that came back to me a year later. I came, I talked to you, and I told you, fix A, Y, Z, and this is how you're gonna do it. You go do it, and you come back to me a year later. So it's just about not giving up and also not living in fear because of what may have happened in the past or circumstances that may have led to a bad income situation or credit situation. There's always ways to fix it. It's just about talking to somebody that knows how to fix it. And then they can guide you through it.
Okay, Andrew's not going, so don't worry, she's still going to be here.
Yes.
She will be here. We'll still go to hear a bit from her. If you have questions that you still want to have her share, just you can still package it. She's probably going to come and talk about it at some point. I'm not kicking you out, but I'm just going to.
But you are.
Andrea mentioned something I was actually going to mention, and I do appreciate Andrea for you guys coming. Andrea, like she already said, she's a mortgage specialist with us at CIBC, and she does a great job. That's why she comes, highly recommended. I'm not blowing your trumpet, so don't worry. Yeah. But one thing she said, which I actually wanted to just point out, is people were asking about the variable thing and then the fixed situation. Now, I do know that with us, you do have the option where you can actually start variable, and depending on how the market begins to turn, you can lock into fixed. So just in case you find yourself in that situation and you begin to see the market trending in a certain direction and you're freaking out, you can't sleep, be a good idea to go in and try to lock yourself into a fixed rate. Okay, all right, I'll invite the next guest today. Now, don't worry, the guests are not going. If you have questions, initially my thought was to have them do a panel kind of thing, but I got caught into something else. My apologies. but we do have them staying. So if you have questions, you're still thinking, that they will probably stay around to help. So I quickly want to invite the next guest. His name is Femi Ogun. See the guy with his deadly beard. You're looking at him, you think he's some mean beard. Think he's like, the guy is so soft. Don't use the beard to judge him. He's so soft. Femi Ogun is actually a strategist. He runs a portfolio, portfolio in CIBC. We do have a group called the Wood Gandhi Group, and he runs a portfolio. They are supposedly portfolio managers. He is one of the only black that I think I know right now. You don't have any? Do we have any right now? We don't have any, right? Yeah. So we know black actually that has a portfolio of investment they run. So they create portfolios of various kinds. So welcome to our group, so please.
Thank you, thank you, thank you. If I'm not loud enough, let me know. I'm used to, sitting in front of computers, not talking to a lot of people, and looking at numbers. So when I got the call from Samson and he told me, hey, here's a presentation, first of all, I looked, I was like, how many computers is there? What number should I bring? And it's like, just talk to people. It made me happy, and I'm here. And following up with Andrea, I don't know if I'm a smooth talker like her, so I'm more, analytic. I go a little bit deeper. So if I'm going, technical, just stop me and say, Femi, I don't understand. But I'll introduce myself. My name is Femi Ogun. Originally born in Lagos, Nigeria. I've been in Canada for over 22 years, and I came when I was little. So finance has sort of been my world. I used to be an athlete before, and now I'm in finance. And just want to chat with you about investing and what is happening in the markets. The clients we deal with are a little bit on the technical side. So for me, I'll go a little bit, investment 101 to see why people are scared of investing, how people actually feel in the market today in regards to some political tensions. A lot of people are watching the news. We watch the news, but we watch the right news. Let's put it that way. A lot of people panic with social media. We're in the information age right now, and a lot of people see it on their phones, see while driving, hear it from their friends. And information moves, I think, according to data, information right now moves faster than it has ever done, ever, in the life of humans. So a lot of people don't understand that. They're still trying to figure that out. But I think the first thing I'll start with is, I'll make this more conversational and start with volatility. A lot of people are seeing, investment portfolios. I know Pastor mentioned, when he started his first RRSP and how that is going. A lot of people mentioned, how can we buy our first house? How can we buy a second house? What that looks like. On the investment side, we look at it more holistically. And we look at it as volatility in the market presents opportunities for us, right? So, for example, in Alberta, we have people that, work in oil and gas, live in Alberta, love pipeline, invest in, Shell, Chevron stocks, and they're like, I have a big portfolio and I'm doing really well. And I tell them just one question. What if the market crashes in oil? What happens? And they stop and say, it's never going to happen. I work there. It's happened multiple times. And when we start looking at investing, we have to look at volatility. And volatility in the long run is something I think a lot of people don't understand. I think it's something that people need to dive a little bit deeper into understanding. What does it mean if the market goes up and down, or what if it stays flat? So maybe I'll toss a question to the crowd, what they think volatility is, I think the first question is, what do you think volatility is? Let's start that way. Just anyone.
Yeah, volatility, from my understanding, Volatility is just having the scenario go up and down, and then can go up again and come down again. So it's not stable. It's not like guaranteed, consistent. And I know that oil and gas is one of the most volatile industries. It can soar for 8 years, and then it will dip so badly that you forget the 8 years.
Correct. That's perfect. What about you?
Actually wanted to say the same thing. For me, I feel my idea of volatility is instability.
Okay.
Instability in terms of this thing, like in the oil and gas, like she said. I remember I was in the oil and gas back in Africa, and it was actually volatile, kind of. Sometimes it dips, and even the workers lose their job. Yeah. Yes, you see it at home, you know. So, and those that have invested there, they actually lose. They lose a lot. So that's my idea of volatility.
Okay, and wait, you can hold the mic.
Okay.
I have a follow-up question. Are people scared of volatility in regards to fear? Because I feel like, in regards to when there's volatility in the market, it creates a certain feeling of fear.
Yeah.
It creates uncertainty. People start losing their jobs.
Yeah.
How do you feel about that?
Of course, what I feel about that is you are usually very unstable. You're always living in fear of what happens next.
Okay.
Yes, in those sectors, you're always living in fear of what happens next. It's like somebody having like a part-time job. Any day you can just be pushed off. That's how I see it. Yeah.
Amazing. So those are amazing answers, I would say, in regards to volatility. In the investment world, we look at it completely different. Completely opposite from that fear. And I'll tell you why. Every time there is a volatile market, I want you to sort of change your mindset in regards to what does it feel from the investment world? What does it feel from your day-to-day living? Apart from the employment, if you're in that field, obviously there might be some factors that will affect you. But I'll tell you this, when there's volatility in the markets, I've never seen so many people in the parking lot in my office. Not clients, not anyone else that works in the building, but everybody in investment is in the office 3 a.m., 4 a.m., waiting for that volatility. And the reason why I'm saying it is volatility presents opportunities. In our world, and the way you want to look at it is volatility presents opportunities. Let's just piggyback on what Andrea said. In the housing market, the market goes up, it goes down. People are like, what's going on? When should we buy? It goes down, more mortgages come up, people buy, you invest, it goes up, people sell, you're making money. It goes up, and people are like, should I buy? There are people on the top side selling, making the money and waiting for it to crash. So you have to look at it from two sides of the balance sheet. The volatility on the other side presents opportunities for you to actually invest into the market, and actually for you to pivot and diversify. That means, a lot of people feel a certain way in regards to the market is up. I'm in oil and gas, it's going to be volatile. But people don't know how to sell. And when you look at investments, it's easy for you to go into any bank or any financial institution and say, I want to buy RSP, I want to invest my money in the market, and they sell you something. But have you ever noticed that majority of the people that sell you things don't know how to tell you when to sell those things? So you buy a stock or you buy a mutual fund and you've had it for a long time It's like you saying you bought an old car. You bought an old car, and you spend money on fixing it. Over the years, the car is getting older. Newer models coming out, safer for the roads, better seat belts, better safety features, airbags. But you don't sell your old car because you really love it. But then you get into an accident, and it actually hurts you, but the new car would have saved you from it. That's the way you want to look at some of the things in regards to you can invest in the markets, but when do you get out? Volatility presents opportunities for you to get out. When the market goes up, you liquidate, you get out. If you know there's an opportunity for it to go up, I think you can ride the wave by buying low, buying undervalued stocks. A lot of things are down right now, and most people don't know. A lot of people there's in the news, they're talking about Trump, they're talking about the markets, how Trump is going to crash the markets. But if you actually look at the history of everything in the markets, ever since Trump has got into the market, the Canadian market has actually done well. A lot of people looked at, I think when the tariffs were meant to be implemented, I got up bright and early. I was in the office at 4 a.m., started my computer, and I'm waiting there, and I get 2 phone calls in the morning. Normally our portfolio, a lot of people don't call us because they expect you to be busy working for them. I get 2 phone calls, and the 2 phone calls were, I'm ready. And I said, we're ready on our end. The market dipped around 8 to 10% in some areas. We bought. A lot of people said it's going to go down. Within 14 hours, same day, the market has already recovered the fear of the tariffs. That is volatility. So sometimes it lasts longer, 2 months, for example, like COVID. Sometimes it lasts a couple hours in the markets. Maybe I'll shift gears. My first item was volatility. I'll shift gears into long-term investing. This piece covers a little bit about the real estate market, but it also covers what people feel in regards to financial planning. I think before you invest any dollar into the market, you need to take a step back and look at it in a way that, do I have a plan? And I'll give you an example. We manage over, I don't even know the number now, multi-million-dollar families, and we only deal with the top 2% of the wealthiest clients in Canada. And when you look at the way investments actually work in the overall picture, you want to look more long-term. And I'll toss another question to the room. What do you think the difference is between short-term and long-term investing? How does short-term and mid-term investing affect like the real estate markets? Timeline-wise, what do you think long-term investing is? Give me how many years, roughly, if anyone wants to answer the question. So the first one is, what is long-term investing in years? 20, 25 years? Okay. Okay. Any other takers? Okay, so in the investment world, the man in the back, I don't remember your name, is pretty much correct. So between that 7 to 10 years is considered long-term. 25 years is couple terms of a long-term opportunity. 5 years for us is around mid-term, and anything below 5 years is short-term. So when you look at investing, and you look at overall pictures, you want to look at short-term being, I want to save for a house. I want to buy my next car. I want to save for, my kid is 15 years old or 13 years old and they're going to go to school when they're 18. You look more short-term. When you look mid-term, I want to buy my second house. I want, to go on this big vacation that, family vacation with multiple people I have to afford. And when you look long-term, you're looking at RSPs, you're looking at, your real estate portfolio, maybe a primary residence or a commercial property that you don't think you're going to sell. You're looking more of a bigger picture. So when we look at investing as a whole, we can invest for you as much as we want, but I think before we touch any dollar, or before you actually put any dollar into the market, you need to draw a line in the sand and separate it. Short term is meant to be 6 months of living expenses. So you look at your rents, your car payments, everything 6 months from today. Most people should have that in a savings account, or what is called a short-term CD, which is a short-term like cash deposit account that they can access tomorrow or next week or whatnot. Some people use investments for that. Some people use like an home equity line of credits. On our side, we don't like to, it's a combination. Some people like to use, for example, equity in their house and invest into the market. It just creates a double risk. But do you know over 80% of Canadians don't have a short-term savings? That means whenever an emergency happens, they use a credit card, they run to the bank and say, I need a loan on my house. They come to the investment advisor and say, liquidate our investments, I need to, fix my car. That's not why investments should be available. Investments more, if you're looking at short term, should be, you have it in your savings accounts, you have it in a GIC that is flexible. But I always try to educate people, it's hard to get there, but one day put an Excel sheet and say, 6 months of my living expenses, do I actually have it? If I lost my job today, if the banks close, or my investments are locked in, let's say long-term investments, can I actually say I can pay my bills without any money coming in for 6 months? That's the way I want people to start envisioning short-term savings, and that would help you actually start building that nest egg. You know how she mentioned credits? That would help you be able to satisfy that credit card and keep your credit high once you have that safety. A lot of the clients I deal with, and a couple years ago, I looked at the population of a lot of the clients I manage, and I said, there's really no diversity in a lot of the clients I manage. And I did see a gap, and I talked to a lot of people in the industry about it. And as Samson said, I think, I don't know, portfolio manager-wise or like investment advisor, like owns their own team. And probably there's only like 3 of us in Canada or 2 of us in Canada. And I said, why? Why is there a gap? And I think the gap is the education piece. Because a lot of my clients that were not in that, they were not introduced to wealth management, they were not educated, is because they were just missing that. They lived paycheck to paycheck, they put their money away, but they never just thought about it in a way that, how do I make my credit good? Apart from paying my credit cards, you have to start thinking of the safety in investments and separate everything. Long term needs to go away. Don't look at it. As Pastor said, variable rates is nerve-wracking. It's something that doesn't make people sleep at nights, right? I have 4 clients in the families I manage that don't sleep at nights because they look at it every time. So what we did was we told them not to look. Stop looking. Look at your bank accounts. Your bank account is not going to change. Only if there's a scam in your bank account or something is going on. If your credit card changed, you've spent something, or your wife has spent something, or your kids have spent something, or they've scammed you and someone has spent something in there. So it's something that you put aside, and you can look at those. So a lot of people look at the stock market and they panic. They say, oh, the stock is down 2%. I was like, it's down only 2? It was down like 8, 5 minutes ago, but you didn't see it. It's recovered, now it's 2. So some people get that fear. They look at the news and they see red on the screen. They get that fear. I think for you, you want to look at it as opportunities in the market. Maybe I'll shift gears to diversification. So when we look at diversification in investment portfolios, you want to look at different areas that don't actually, they're not linked together. Let's put it that way. So for example, if oil and gas goes down, do you have other investments in other areas that are not related to oil and gas? Because if you invest long term, it tends to go up. So for example, if a short-term volatility hits the market and it goes down, do you have, for example, your home is a great edge to inflation? So your buying power, because you live in the house, you're not paying rent to anyone, you're actually helping yourself grow. Real estate market is a great investment. So a lot of people will come and say, here's money, can you invest everything? And I say, do you have a house? They say no. I'm like, okay. Where do you live? They tell me the rental market. We calculate their rents and put it into a cash flow plan. I tell, do you have a car? No, I'm leasing a car. It's a good thing, it's a good business strategy, but what's the plan with that? So we try to understand that aspect. Are you paying any expenses? Like kids' education is expensive. Do you like to travel a lot? Is expensive. Are you buying any fancy car we need to know about in the next couple of years? Could be a big expense. So we, on the investment side, we try to understand all those questions. And, whenever you go into banks, the best thing for you is the knowledge. And I'm here today just to give you those little highlights, those questions, that even if you go into a bank, if they don't ask you, are they really doing the right thing? If they don't ask you, is it just an easy, I get the money and you can walk away? So I'll tell you this, when next you go into a bank and they tell you your $1,000, you want to put it into an investment and say, this is the right portfolio for you, ask why. I bet you they're going to be shocked. And the reason why you should ask why is it that me coming into the bank today, you telling me this portfolio, out of all these chairs, sit right there. Why? And you need to understand it. And I think once you start understanding, when they tell you, okay, the reason why is you want to invest long term. This exact portfolio or the stock is, even though the value, it's meant to have more value. Let's say it's meant to be priced at $100, and right now it's priced at $20. There's value. Is this company, and I'll give you a little bit of background of what we do. When we look at anything we buy into the markets, I sit my team down and I ask them two questions. One is why, and is this company going to be around in 50 or 100 years? And each of them have to explain to me why they think that company is going to be around in 50 years. And when they answer that, why is it going to be around in 100 years? And if I like the answer, we buy. And the reason why is we like diversification, we like value. That means when we invest long term, we want to make sure it's not a company, it's not an easy, quick bucks. In long-term investing, we don't touch this company is open today, 2 months from now, it might be gone. We don't touch that in value investing. We look more long-term. So these are questions you want to ask. Who's the portfolio manager and how long have they been around? Because you don't want to invest in something that someone just, hey, this is a really good deal, sell it to your clients. No. Tell me why. What is the performance? And when people say, hey, I show them the investment, they like it. I'm like, can you show me what it has done in the last, and you hear this. A lot of people now will go into the banks and say, I want to invest my money, and they tell you, this did 14% last year. And you say, okay, this is amazing. I want to make 14%. That's the wrong way to look at it. I think you need to say, what did it do over the 5-year? What did it do over the 10-year? What is the track record over 20 years? And then, if they don't have an answer for you, or they don't show you the trailing return, then that's not a good investment. And the reason why I'm saying that is, Anywhere you put your money in the stock market in an equity portfolio last year, you would have made more money today. So when someone says this is 14%, it's unrealistic. It's too good to be true. You've probably heard that before. Normally, an equity market in stocks does around 8 to 10% on the high side every year. So when someone says 14, coming out of a year, I'll give you an example. In COVID, some people said, I bought this investment, it made 22% last year. I'm like, yeah, last year was COVID. The market is rebounding. What is it going to do after COVID? What did it do before COVID? Now draw that out on a straight line and tell me what the average return is. So I want you to start thinking about that in regards to some of the questions you might be asking. A big piece is of our jobs, and a lot of people don't know it, is we're disciplined, we're boring. We don't like to, if you tell me this is a car and it doesn't look like a car, maybe it's new. So I'm never going to go into it. I like things that, you tell me there's only one direction. You don't tell me go through the back door and you get there. That's the discipline in our industry. So whenever we invest, we stay disciplined. Whenever the client tells me, I want my money as safe as possible, we stick to that. We don't look anywhere else. When they tell me I want a little bit of risk, we tell them why. And the why is your risk 5%? Is your risk 1%? That means if the market if your money moves by $1, you're going to call me? We need to understand that. That's why different levels of discipline has to be there. You have to establish that. A lot of people, with investment portfolios right now, they were not comfortable during COVID. They were not comfortable when the financial crisis happened. And one of the reasons why they were not comfortable was because over the long term, they didn't understand what investments can actually do. So when I say, who here knows the meaning of maximum drawdown? Anyone? Maximum drawdown. Okay. So a maximum drawdown is, in the life of an investment, how low has it gone when the market dips? So some people don't know that, but you can ask. These are questions you should be asking your investment advisor or whoever you're investing your money to. When the financial crisis happened, how low did this investment go? And when they tell you drawdown, yes. And when they tell you, for example, a lot of people love, I don't know if you know this, a lot of people love NASDAQ index. When they hear NASDAQ, S&P, when they hear that, they're like, whoa, this does good. But they always see that when the market is doing well, right? It's isolated. The risk is not spread out. It's not too diversified, but it has good returns. But when you look at something like that and you look at what a maximum drawdown is, you want to understand when the worst thing happened in the last 20 to 30 years, if you had put 100,000 in there, what would you see in your bank accounts? And people would say your maximum, so your 100,000 will go to 60. That means you're down 40. Can you sleep at night? Right? So a lot of people like when it's going up, but when it goes down, so for example, these are questions we pose on our end to a lot of our clients and the families we manage and say, this investment, you really like it, or this stock, you like it, but last time the market dropped, it went down 30%. Are you okay with that? And they're like, 30%? I'm going to lose 30% of my money. You're not really losing it. We have not sold. But if it was down 30, that's a good question. The question of when. So when is over time. We can't predict the market. We can't see the future. But we can show you trends. The last time it went down 30, it went up between, the next months or years, we can show you the trend. But I think the matter of your risk profile should be aligned to that, a little bit aligned to that. So people need to understand, you need to understand that if it does drop, what would that look like? Did you have any questions for now? And I have two more topics I'll be talking about briefly, then, yeah.
Those of us who are not in the high income bracket, when I mean high, people that make 1 million kind of thing, we're not there. And so most of the time our investment is, they find out you have 30 or 40,000 dollars sitting down somewhere. And one banker calls you and say, hey, Mr. XYZ, we noticed that for the past 2 years, you've had 35,000 sitting down doing nothing in your account. And they call you and say, I leave my money alone. Let's help you. No, leave my money alone. Don't bother me then. Some will call you and then you think and say, okay, what do you want to do with it? Yeah. And then they start just the same question you asked. Then they start talking, and usually they have this, they love to talk. I've sold cars before. We love to talk until the person is ready to buy. They will talk and talk. But what I found out is, we don't even know what they are. When at the end of the day, when you now say, okay, take this money. After all, it's been there for 3 years. I didn't even bother whether it was there. Can you take it now? The question is, I don't even know what they're investing in this thing now. They will say, okay, we'll take it for the next. Are you comfortable with medium, low, or high? I tell them, look, I'm not a young man, so I don't like this long thing. But the question is, how do we know where they are putting this money? Because we are talking of different products now, okay? The one that came down, the one that went up, you don't know where the money is. You just give it to them, and then you go to bed. So how do we know?
So I think the question is, you need to know. You need to know where their money is. You need to know what they're investing in. And a lot of people, I'll tell you this. A lot of clients on the retail space, they don't want to know, or they don't know what questions to ask because they're not used to it. They go into a bank, and the bank is the place that should educate them, right? But it depends on your knowledge, right? So that's why I'm telling these are the questions like, why is it that exact investments? What has that investment done in the long term? What companies are invested in that portfolio that you're presenting to me? And you made a good point when you said, your risk is low, your risk is medium, your risk is high. Where do I stand? That's the level of risk in regards to how much that portfolio can drop within the timeline of the investments. So if your portfolio is low risk, maybe the maximum that portfolio can drop is maybe 5% or 3%. Depends on where in the low bracket that is. If it's medium, it can drop maybe 8% to 10. If it's high, it can drop 30, 40. But then you have the extremely aggressive. We have clients that are like, if my portfolio drops 80%, I'm okay. Those are the kinds of clients you want to be careful with everything. So when we look at dollar amounts, we don't look at it as this person has $1 million, this person has $10. We manage all generations. And every dollar for me counts. For me, it doesn't matter. I look at percentages. We don't really look at dollar amounts. The reason why is I want to sleep at night as well. And, if I look at a $100 million portfolio that dropped, 20%, how am I going to pick up the call and tell the client that, Mr. Client, I'm down 20 million today. I don't know if it's going to be 30 tomorrow, but then you look at the same client that someone has $10 and that's only $2, right? So we don't really look at numbers. We look at more percentages. We look at the principle, the discipline of investing. We look at long-term valued company. I think these are things that, we all need to educate ourselves, ask the right questions. Those advisors are there, and you need to be able to ask. They need to be able to educate you. My goal with all my clients are to understand every single thing, and there's a gap in the industry, and I'm not sure if you're aware, a lot of female members of the family don't really pay attention. So we actually host a seminar on our side. We have a course on our side to educate the women in the family as well, same as the men, because a lot of our clients, you call them for a meeting, they're like, yeah, my wife doesn't come to things like this. We actually say it's important that she's there. The reason why is, I'm not sure if you know as well, in the next couple years, the wealth transfer is going to be more on the women's side than the men. So a big generation shift is happening right now, and over 60% of the wealth is going to be controlled by women because the generation of the men are passing away. So what does that say in regards to investing? That means all the advisors, a lot of men, a lot of the generation of men that controlled, and I would say there was a gap in the industry in a way that a lot of the men made the decision about the finances, or they knew about where everything was. A lot of that generation is going to actually be passing on that wealth to women, with the next generation that will be passing it on to their kids. So now there's a gap of advising and educating, a lot of the females in that portfolio to say, I used to do this with your husband, and they're like, he never brought me to the meeting, and you ask them, and you're like, well, I invited you. I never got the invite. He didn't even tell me about it. So we're seeing a lot of that in the industry. So I think it's really important that when you're going to make financial decisions, the family as a whole needs to be there. There needs to be a level of understanding as well between the two like husband and wife. Start involving your kids as well, because there's a big generation, especially, I grew up in a Nigerian family, and when we were going to the bank, we stayed in the car, we stayed somewhere, we never went in. Right? So, these are things that you need to start involving your kids. Once you start knowing, and, I don't know if it's like a lot of people do it now, but start teaching them. Give your kids a debit card. CIBC actually you can give your kids a debit card with a limit, like $50, and that's all they can spend per week or whatever you set it to. Start educating them, because the more you educate them when they're young, the better they would understand when they're 16, 17. The better they would understand when they want to open their first TFSA account and ask the advisor why is it that portfolio, because you have taught them, right? You need to start educating. And my last topic is, when last did you review or adjust your investment portfolio? 2 months ago? Okay.
Because I know that with CIBC, your advisor
Yes.
would normally call you.
Okay.
Is it annually or something? I can't remember. But they have a particular timeline
Okay.
that they call to review with you.
So when you review your so the minimum requirement is once a year, right? But have you ever gone for a review in regards to financial plan? So you did? Okay. So a lot of people review their overall portfolio. So once a year, call you, hello, pastor, how are you doing? Family is good. Anything changed? Okay, sounds good. Take the box, next. But what if, your family is growing? What if you're planning to buy a new car? What if you are going on a vacation and you need money for? So you have to link your investments to your financial plan. And a lot of people buy investments but never ask the question. I've run investment for a long time, and I've rarely had the question saying, is this the best investment for me still? Is this still the best investment I should be putting my money in? And most people Don't ask that, right? So for me, it's easy. I just say, yeah, everything looks good, let's keep going. But you need to be able to ask those questions. You need to be able to tie those questions to the overall picture. Tell them about your plans. You want to travel, it's like the mortgage world. I used to be in the lending world back in the day. People hide things from you. It's a weird thing, but everyone in the bank, they give you just enough to get approved. They just give you, it's like they're hiding things from you. And I'm like, if you tell me everything, I can map it out. It's like a blueprint of a house. If you tell me you want to build a house, and you tell me you want 5 bedrooms, and you tell me you want 5 bathrooms, but you don't tell me you will need an extra bathroom, or you don't tell me one of the kids uses a wheelchair and I need a ramp on the house, how would I actually get you to your final destination? So I think the more you tell us, the better, same as the lending side, because we can now have enough tools to actually paint that picture to the people that approve it. So, any questions? Okay, we have one.
Okay, I was going to. Go ahead. Oh, you. You. Okay.
I didn't want to say anything because you didn't interrupt me, but I just wanted to ask, because this is something I hesitated on, even though I've been in the bank for so long.
Yes.
I was against RSPs. Because a lot of people think, oh, why should I put it into an RSP? It's locked in and I'm not going to be able to access my money. Can you go into a little bit of the tax repercussions of that and why it is good to do it and the life stage part of the investment?
Okay. So a lot of people put money into RSPs because they look more on the tax consequences in regards to getting some money back. Some people look at RSPs for discipline, because if they don't put money in, they're not going to have money in retirement. A lot of people in Canada are going to retire and they're going to be scared to leave their job the last day because they don't know where the next paycheck is going to be. They don't know how they're going to buy groceries 5 months from now because they never saved. So I think the RSP question needs to be tailored to the individual. We always look at more of a financial plan, map it out overall and say, is an RSP good for you? We tend to work a lot with the accountants and say, okay, if they did the RSP now, what would that give them in the overall picture? Is it actually tax efficient? Some people, it doesn't make sense, especially, and I don't want to, it depends on the situation you're in. Some people are in the high tax bracket that even if you put money in the RSP, they're still going to pay high tax. So for me, when they look at me and say, should I buy RSP? I tell them, sir, the government is still gonna pay tax. You can't evade tax. And some people, they actually need it in order to get some money back. And a lot of people think about RSP in a different sense because when they get money back, they spend it, right? If you're smart with your RSPs, you get money back from the government, you put it in your TFSA. That's an automatic contribution to your TFSA. You don't need to contribute. You got money from the government, you put it in your TFSA, and that's going to go tax-free, right? So you want to start looking at that as efficiencies of RSPs. So I think it's more of a tax play. Each individual has you'd have to review each individual scenario. Yes.
Yeah. In the past week, I've been taking a kind of just like a course in accounting, and I found out that some of us are almost illiterates in terms of financial education, like me. It was in that class I found out. Like, we really do not know how to, manage our funds. My question is, as a low income, one in the low income brackets, what are possible investment opportunities that one can delve into?
I think the low income space, you got to look at it from different perspectives. The reason why is you don't want to put money away if you can barely survive, right? But you want to have a budget. I think the budgeting piece, the cash flow piece is a significant thing for everyone. If you're low income, if you have high income, if you don't have a cash flow, and I don't know if you have done this before, go to, I think CIBC has a cash flow calculator, or you can ask her, I'm pretty sure she does. If you put your cash flow calculator together and you have a surplus at the end of it, that surplus, a lot of us say, surplus, I can buy more food, or I can go out and party or do something, go hang out with friends, go and travel. That surplus, before you actually spend it, I think you need to think about, do you want to enjoy now, or do you want to have a comfortable retirement later? And I think once you understand that piece, it will take you a long way, because, if you had $1,000 after all your expenses, or $500, and you say, your savings, maybe I'll backtrack a little bit. Your savings should never be thought about as savings. Your savings should be thought about as an expense. So whenever you say, I need to pay rent, you should look at your savings as, I need to save. So when you do your cash flow, your savings should actually be on expenses. That means something out there, your future you is taking money from you now to put it away. It's taking rent from you now to park it so you have a better life in future. So when you talk about income, I think the first piece is to look at, what is my cash flow? What is my budget? A second one is, and I like that you said you were taking some courses. I think a big gap is the education. A lot of people don't really educate themselves on finances. They're like, well, my accountant is going to do that, and that's what they do best. I think everyone should understand a little bit about it. Yeah.
From what he just said, that's where our gap really is. It's worse with us in Nigeria. We're dummies. Maybe Africans, complete dummies, because nobody talks about these things. And I will even tell you that there are some finance people in Nigeria. I mean, I was challenging some in the WhatsApp page. We're talking about sending money home, blah, 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 the remittance, and they said, we are just giving it to your family. It doesn't affect the economy. And the man I'm talking to almost has close to a master's in, and I was saying, are you serious? In finance.
Yeah.
He says, you're only giving it to your family. And me, that is an engineer, I was almost going to break it down for him, how that money runs the economy. That's by the way. So if CIBC and all that, if you can organize something, because the earlier we catch them, maybe from a certain grade, we introduce this finance thing for kids to learn, our children, it will be better. Because some of these things you are saying now, even I'm sure I had to be pushing into my kids and, and all that line of credit they will give to my daughter in those days. She would not even answer them. She would not even respond. It took a while for me to start saying, no, this is what you can use it for. So she now started saying, oh, okay, next time they call me. So the last time she ran to me and said, they've called me again. I said, take it now. So that kind of a thing. So how do you plan to educate these younger ones, at least so that you sell it early, catch them young?
Yeah, and I think especially I think quite a few of us are from Nigeria, right? Here? Not you. Maybe. I think it's the education or the literacy piece, we need to start asking these questions. And I think it starts up from the parents. Like, my parents never taught me about, banking. They never taught me about finances, but I see the gap. And the reason why I'm here, one of the reasons why I'm here today is because my goal is not to just invest money. My goal is to educate. I always put that first before the investment. The investment in my world is maybe 15, 10% of what I do. The back end is the research, the education piece, the telling people, the understanding how it actually works, right? And to your point, most of the people that I manage today, their parents and grandparents educated them. That's where they are today. A lot of Nigerians don't have that. And that's the gap. So I've started seeing a lot of clients now. They're like, why didn't you tell me you could manage my investments? Why didn't you tell my dad? Because my dad had 50,000 sitting in his bank account. Nobody ever called him. What is going on? But I think it comes from within. It comes from conversations like this, seminars like this. And I'm so grateful that you guys, organize this as well. The reason why is you need to educate them now. You need to also be involved. A lot of people don't have a plan. You look at them, and if I ask you, how do you have enough money saved for your grandkid or your great-grandkid to work? And a lot of people are like, what do you mean? My great-grandkid is going to find a job. He has to go to school, find a job, and work. But the flip of the mindset is, are you actually creating generational wealth now that your kids is going to add to, and your grandkids is going to add to? Because we have generations that 4 generations don't have to work because their great-grandparents have been setting that up. We have to start educating our kids that, if you're going to work, what does that look like? You're not just going to spend dad or mom's money, and then their kids are going to start from scratch. You want to start looking more long-term in regards to investing. You want to start telling them, what does the picture look like? I don't want you to work. I want us to have enough money to maintain the family, especially a good thing is real estate. Calgary has a lot of what you call real estate money, and they call it old money. You've probably heard it from time to time. And these are people that bought land, bought real estate around. I ran into a guy that told me, hey, do you have anybody to buy this? It was 40 acres of land. I said, 40 acres? When did you buy this? Oh, it's been in our family for a couple years. Couple generations. And I looked at him and I said, wow, so where does it end? He said, yeah, this is the end of it. I looked, I could not even see the end. And he said, whispered in my ear, he said, and my kid just bought the next 120. And I stopped him and said, congrats. Like, there's nothing I can say. That's generational wealth. He has educated his kid to continue building that legacy for generations to come. But it starts now. It starts from teaching your kids. It starts from you investing with them. It starts from you picking up real estate, investing more long term. So I hope that answers your question. But I do feel a lot of, I won't say it, but Nigerians don't have that in them. Even I talk to my parents and they're like, no, we're not going to diversify our investments. This is what we're going to do. Yeah. Yeah.
I'm 60.
Yes.
We have proof that. Do you know the things going on out there? The thing you hear out there in our generation is eat your money now and die. Because these kids, they don't give a damn about that. I've been in a meeting and this is what they came up with. So I'm saying, but what you're saying is different from what these guys are saying. They say, look, forget it. You know what? Take your money, enjoy. Instead of storing your money down, and then the day you can barely move, these kids will take your money and go and cruise around with the Benz 350. So my daddy gave it to me. Meanwhile, you suffered. That's the way they are seeing it. Yeah, but what you are saying is very debatable because that's what they're talking about. I've been in a meeting with them, and you won't believe it. Over 50% of the people went the other way. It was a few of us that were listening to, going the way you are going. But a larger percentage said, my money is my money. And they should go and work for their own. I'll chop my money, chop your money, and then kind of, how we talk.
And I think, I do think that's the gap. That's the gap people are missing. Because, like I said, there are not a lot of diverse people in the wealth space. And the reason why I think is part of that mentality as well of, my money, chop my money now, and people don't understand you got to take care of generations to come. They think about now, but it's not about now. You can live in the moment, you can enjoy what you have, but you got to look more long term. Look at your kids. A lot of kids right now are waiting. I've run into so many people, they're like, I'm like, why don't you get a job? My parents are going to pass away one day and I'm going to get it. And I say, what would that look like for you? What are you going to do to your kids? I don't want to have kids. So all they're looking for is to live, enjoy the parents' money, and go. They never look past that, and I think that's what's blinding a lot of people.
Yeah, I've got a quick question here.
Sure.
Canada probably has the highest debt-to-income ratio in the world in terms of how much debt they owe with regards to their personal finances.
Correct.
So the bigger question is, why isn't there, I mean, I think you kind of answered some of that, is why is the uptick in financial literacy so low in Canada as a whole? Why is it that as much as there are seminars like this, and they're abundant, I've been to quite a number of them in the last couple of years, why is it that the uptick is so low? Is it that people just don't want to read, or are they just coming to the bank for quick fixes, or what are your thoughts about it?
Yeah, so in regards to, so Canada is a place that the system, you have a lot of people with debt, mortgages, lines of credits, but if you actually look at the two sides of the balance sheet, in order to build wealth, you need some of that, because some people use debt to get a kickstart in life, but it's all about the debt management, right? So when you look at portfolios or you look at investing, a lot of people in my space, and you're going to get busy in the next couple months because the interest rates are going down. People on our side are like, do you have a good mortgage broker so I can take the equity out of my house and give it to you? It's a different mindset because they're looking at if the bank can lend them 3, 4%, 5%, and they can make 11% off the market, they're going to do it. It's a tax play as well. They write off the interest in some cases, and they get the spread. That means their investment is working, plus the bank's money is working. They just got money for free that is working for them. So when you look at the debt culture, in Nigeria, there were not a lot of places that had mortgages. You cannot really get mortgages. A lot of people want to buy their house outright, but then you notice that a lot of people will have 1 or 2 houses, but here they have portfolios of investments. So I think it is a high debt, but it depends on the debt management. Like, one of the things, use only 70% of your credit card. Don't refinance too much. If you do it, make sure it's tactical. That means you sit with your accountants, you map it out. If I take 500,000, I put it into this investment portfolio, I can write off $60,000 in interest. What are you going to use that for? So you need to look at it as a whole picture. Yeah. Did I answer your question, Sora? Yeah. Max.
Okay, Femi, I do have a question that I have a question for you because obviously I mean, I think he's already said debt management, so that's key. If you don't know how to manage your debt, you're going to get into trouble.
Yeah.
Yeah. But I was going to ask the question, it's more a question that they've asked a few times, and I wanted us to speak to it, so you can speak to it for them. There's crypto investing, and there's SR investing. So can you speak a little bit for the benefit of them?
So I only speak to places that I understand.
Okay, you're trying to run away.
We don't invest in crypto at all. The reason why is we only invest in regulated industries because of the types of license we have. So I do know people and I do know clients that do invest in crypto. I personally cannot because I'm regulated, even though there'll be some entries that we could have gotten in, but we barely touch that. I think it's gonna come. I think there is a space for it down the line, but for banks and whatnot, it's more indirect. So you can see banks investing in them indirectly. A big piece that most people have started talking about is AI, because it's in the news. A lot of companies have ran. But I do think there is a space down the line. It just needs to be regulated. Once there's regulation, once you can, I like investing in things that you can feel, touch, you can see, they're going to work. Intangible. You know, I don't like, buy this air and it's gonna, yeah. So those are the things we don't really touch that space right now. So I can't really. Thank you. It's a good. We hear it all the time. We get questions that we want to buy crypto. It's too. Oh yeah, you don't want to sleep at night. Buy it right now. It might go up, it might go down, but at the same time, there's no element of predictability. There's no deeper track record. It's really new. It's foreign to a lot of people, right? So.
Do you buy SRs and do you buy futures and options? Am I going the wrong way too? I'm putting you under pressure, right? Okay, I'm not going to put you under pressure.
No, it's fine. So we do buy them, but we buy them in more in a controlled environment. So we buy them with some of the options you're talking about would have as 100% zero, like it can go to zero. We don't tend to buy things that can go to zero. So when we buy them, it's in a controlled environment. We restrict the upside and the downside. So even if the market goes down, we cut the downside. And if it goes up, you're limited on the upside. So I would say and that's extremely risky. It's difficult to understand, but we have analysts that will break that down. And when we do go into it, we go into things safer, like the Canadian banks. Like we go into things that don't tend to move too much or deviate from the standard. That's where we go in. We don't go into things that deviate too much when we use those in some portfolios. Yeah.
Any more questions? I'm thinking Femi has. If you guys are silent now. And any more questions for Andrea? She's still here. If you have a question for Andrea, those that are looking to buy, I'm sure she probably said that this is a good time to buy. Did you say that? Okay. So, yeah.
It's always just talking about interest rates with tariffs and all that. Our analysts, she mentioned Benjamin Tal. We're looking at a couple more interest rate drops. And part of it is tactical to fight if there's a tariff as well. And when you look at the overall picture, one of the reasons why the banks are, putting pressure on Bank of Canada to actually reduce the rates is it actually puts more money into the economy. Companies can borrow. That means they can actually hire more people for the companies. Businesses can borrow and produce more at a cheaper cost, which would actually help fight all the tariffs. So hopefully it goes down a couple more times. So I hope this helps.
Thank you so much. I always say, make a demand on this guy. You think it's easy to get this young man to come? It's not that easy to grab them to come. So that they get to come, please, let's make a demand on them. And that's the thing. And thank you guys for coming. Really appreciate you guys able to come. We're done, as it were. But if you still have questions for them, you can always pass them to me. I will pass them. I think you guys have your cards. Do you have cards here? And just drop off your cards. We can also see if we can connect you. So drop off cards, and you never know. You never know. There's a ton of stuff that comes up. And I know we've talked about rate, we've talked about interest. There's a bunch of things that you can potentially do as the market begins to open up. I deliberately wanted to put you on crypto because I know people, it's always a question that comes up every time I come here to talk. People are always asking crypto. And we've said it several times. It's not a space that we want to play in. You don't play in a space where we say underlying asset, right? You don't have an underlying asset for crypto. So it's always but there's a lot of people actually playing. A lot of people are out there right now telling you that they made X amount of percentage in crypto, except if you bought crypto when they were just coming, like you bought Bitcoin when it just started. But if you're buying now, you probably will make a whole lot. But anyways, that's about it. I want to thank everyone for coming. I want to say it's great to have these sections. For those that are looking for places to take their kids, to train them, I've said severally here, in the school curriculum in Canada, there isn't much of financial training, but there is an agency called Junior Achievers. We do training for kids in regards to finance. We teach finance as well there, so if you're open to that, feel free to come. The last thing I would say is, I know everyone is saying buy house, and I'm going to serve as a devil advocate tonight. Yes, the economy will go up, but if the rates come down, and I'm going to put you guys on the spot. So the economy goes up, yes, but it's going to be inflationary. Because the moment you actually begin to have all that stuff come in, inflation is going to kick up as well. But that's the story for another day. I want us to end today. Thank you all so much for coming. Pastor, anything else? Okay. Sister T, where is Sister T? Come and thank the people now. Where is she? Come and thank the people. But that's the thing, and that's it's actually sad. The people that we designed this for are not here.
Oh, it's the generation. Well, some of us came to Canada when we were in our 40s. So if we knew if I knew back then what I know now, if we knew back then what we know now, maybe, some of us would be millionaires right now. We won't even bother. We would just retire. We won't even work again. That's my own desire. So I want to appreciate Femi and Andrea. Thank you so much for coming. I know all these kind of seminars, people, will book like a year ahead for you to come give this talk. It's just so sad, just like my husband said, that the younger ones are not here because they think they know. So sometimes they know in part, they know a little bit, but they think something they know and they don't know anything. So it's just unfortunate that, we put these things in place every year. We do this. It has benefited a lot of us who have attended all these seminars and investing and doing so many. I work with the government, so I have opportunity for pension, RSP, which they pay into and all that. So, but I didn't understand a lot when I came. I've worked for 15 years now, and things have really, really improved for me. And I want to just, I hope and the next time we'll have this kind of financial seminar, we'll have more people who want to learn and understand. Just like he said, Pastor said, oh, it's when people now get into trouble. They are not having the challenges, then they come back and say, Pastor, that seminar we had then, who can we talk to? But this one is just on a platter of gold, and we didn't see the people. I want to appreciate everyone that has come tonight, and I want to appreciate our speakers tonight. Thank you so much. We appreciate your coming. We've learned a lot, and if we need to, get in touch with you in future, just give us, okay, we have your cards, and we hope you'll be able to help us out in any situation we find ourselves. We know, like a lot of people, this is a church with a lot of young people who will be first-time home buyers and all that, and they will need help. So, and a lot of immigrants, we're having a lot of people coming in, and we have a lot of people who have just landed this year, like late last year, and people who are just 1 year old. We have a lot of people in the church that will need help. Thank you so much, and God bless you. We appreciate you. And what did you say? He needs help because he needs to buy his first home. So he needs help. So he needs to do a lot of investment so that he will become a millionaire, and then he will just say, okay, next time, just I can fund this. Just joking. Thank you so much. Appreciate you for your time. God bless you. And just whatever token we give to you is not enough, to pay you for coming. So just a token from the church. God bless you. Thank you so much. Okay, do you want to? Okay, let's just share the grace together. The grace of our Lord Jesus Christ, the love of God, and the fellowship of the Holy Spirit be with us now and forevermore. And surely God's goodness and mercy shall follow us all the days of our lives, and we shall dwell in the house of the Lord forever and ever. Amen.